Hi everybody, welcome. My trading approach combines three powerful elements: fundamental analysis, insight from the commitments of trader, short form COT report, and precise price actions based entry. I share my trade setup freely with clients who trade through the brokerage I work with, not just to give signal, but to help you to understand the market narrative and make more informed decisions. Whether you are still learning or looking to refine your strategy, my goal is to provide transparent, value-driven insight that support your growth as a trader. Let's dive into it. So today is 8th of June. I have picked up GBP Kiwi, partly two reasons. GBP Kiwi has been on an uptrend for a really long time. I would say in the beginning of last year, June to now, it's almost close to 1 year uptrend. And then now they have sideways for a while. So I see some potentials of a sideways trade. And the market has actually made a very good head and shoulder pattern, which I would love. If y'all doesn't know what is head and shoulder, let me draw for you. This is the shoulder, this is the head, and this is typical, very powerful reversal pattern. Especially pound Kiwi has been on an uptrend for almost a year, and now we have seen sideways market play out for a while, and we also have some fundamental shift. So New Zealand dollar has been the first country to actually cut rate. So they have cut to 3.25 while pound dollar remains resilient remains holding the rate at quite high rate. That's why it drive the pound Kiwi on an uptrend. But because just recently, RBNZ suggested the easing might come to near end, that means we might since that's explain why pound Kiwi actually went into a sideways. And so pound, due to a sticky inflations, they have actually verbally saying that they would not cut rate too aggressive. So that's why you can see the price actions here is mainly a sideways price action. So remember, head and shoulder is actually not necessary. We only have 75% to become a reversal. So but now we are actually at the 2/3 of the upper range of the trading range. So I think there is a good chance that this head and shoulder can play out. But the way I actually will enter is today is Sunday. So this is Friday. This is Thursday. I suspect Monday might be just pull back to this breakout level, which is around 2.25, 2.26. So if I were to long pound Kiwi, I would actually wait for pullback and then go to a lower time frame, which is H1, to position my entry. But my direction is definitely a short. Moreover, the COT is actually reducing the long since you can see this reducing the long since April 23, and market actually been sideways, and now they're actually mostly short. So there is no sort of commercial wasn't really aggressively longing this thing, but my entry will be pull back first and then come down. And remember, this is the neckline of the head and shoulder. This will be the first targets sitting between 2.2250 or 2.2150. This will be the level I really look at. It's how I would actually throw my short if I think this head and shoulder can actually reverse and move this whole trading range to 100% to 2.15. It really depends how COT actually play out. COT is, I only looking at the commercial. The commercial mainly actually shorting it. They only short it if they think pound Kiwi is actually too expensive. So they start shorting it. So I'm more in line a person that go with the commercial with what we call smart money. But remember, they have a lot of money, so sometimes they can continue to short even the market go ups. So they can actually remain in a bearish territory even though the price go up. Even it go back up to 2.29. That's not a lot for a commercial. It's only about say 2.25. This is only 5% move. So for them, this is nothing. So remember that. So if it play out the next few weeks, next few days play out to here and market does turn back here, I expected this move will be 2 weeks move, not like drastically quick move. It will be 2 weeks. When it's come near to my first target, I will see how the COTs works. If the COTs are remain bearish, there's no picking up in the long position for the COT commercial, then I might take a chance to actually go to second TP. All depends what happened here. Will the Bank of England decided to give a very dovish speech on their cash rate? If they do, then I might have more reasons to hold my short. If they don't, they continue saying that inflation is quite sticky. They don't see themselves cut very aggressively. That means this range bounce will continue to play out. So it really depends what happening on the next 2 weeks. But for now on, for the next 2 weeks, I only look for short. Every bounce of up, I look for short. That's how I played it out. So I also provide this COT template to actually record all my trades, and I do put it where is the level to short, where's the TP, where's the stop loss. Screenshot the trade before it's actually happened so that we know how accurate our result is. So this is my trade setup for pound kiwi dated 8th of June. If you are interested and found this is helpful, you are welcome to email me. My email is actually provided in the descriptions. Good luck in your trading.